Too hot, too cold, or just right? What are you seeing in these numbers?
I think the numbers are just right, especially when you think back a year ago at this time, we were contracting for this sector. And so we've had 11 straight months of growth. You look at the composite index, came in at 52.7, up 0.9 percentage points, just a slight uptick, yet we've been hovering around that mid to low 50 range on this incremental growth for the past year. So the things look good for the sector right now, especially going into the first quarter of 2024.
Can you walk me through the new orders number that was particularly strong?
55.5, it's the same rate of growth as we measure change month over month. And so what our respondents are indicating is that, again, as I just said, that we're looking good going into that next first quarter, rather, for 2024. So there is some new opportunity that is there, as long as we don't have any pullback based on what other geopolitical concerns that we have across the globe right now.
Yeah. Yeah. There's a bit in for duration as well. We're certainly seeing that happening right now. The US 10-year just hitting a 3-year low in terms of the yield that we're watching. Sorry, 3-month low. That's quite an important distinction. 3-month low. So we're certainly seeing some reaction to the numbers. In terms of where we are, what would normally happen in the run-up to Christmas? Would you see inventory builds? Kind of just give us a sense of, in that build-up to the holidays, how that affects the numbers that you look at.
That's a great question. And when we look at inventory, and what our respondents had indicated was, yes, there was a ramp up for the holiday season. But additionally, as we're getting into that flu season, there was also an increase of purchases of the personal protective equipment. And we've had improved capacity. We've seen that ongoing, improved capacity, but yet demand is not as strong as anticipated. So overall, that's why you've seen that change in inventories month over month.
In terms of the strength, walk me through the categories. Like, where are we seeing the most strength, and where is still weakness, or where are we contracting here in services?
When you look at the composite index, professional, scientific, technical services, as well as we look at mining and information. Information has been hit hard over the past year as it relates to business, and that's exports. That's one of the areas that we actually export in knowledge management, would be inventory and that professional, scientific, technical services. And one of the respondents indicated that since the start of the war overseas, in the Middle East, that all activity stopped for a period of time. So that definitely impacted those few industries in this sector.
Anthony, is this an economy that you see needing rate cuts at this point? The financial markets are anticipating that they will be required in relatively short order. Is this an economy that you feel needs rate cuts?
Definitely. Our respondents are indicating that. They're saying that capital reinvestment has been impacted by the high interest rates. We're seeing that in new starts, building. Construction had stayed above the 50 baseline, but that's more about renovation work. We're not seeing the new housing starts that we have seen in the past. And as we know, real estate rental and leasing is the largest contributor to GDP for this sector and in the overall economy.
So that basically means that the data is soft enough that we need the cuts, but it's not strong, but it's not terrible enough that we're desperate for the cuts. Like, that kind of feels like that Goldilocks lukewarm area that we're looking at. Is there a risk, though, that we accelerate to the upside at all here?
It doesn't indicate that we're, looking at the data, especially even though we had the strong new orders index, it doesn't indicate that we're going to overheat anytime soon. We just had this incremental growth. As I mentioned, we're going in that mid to low 50 range. We'd like to see it more robust, but definitely interest rate cuts would help. Hopefully, we'll see that in the near future.
In terms of I just want to come back to the employment story on what is happening here. Can you just give us a bit more nuance in terms of the color? Break it down for us sector to sector. Just give us an idea of what is happening out there, because we've got your data. We've just seen the JOLTS data. Clearly, we're building up. We've got the claims data Thursday, but the big number is the payroll number on Friday. Can you just give us a little bit more detail on what you're seeing in terms of the breakdown, sector to sector, business to business, in terms of what you're seeing on the employment front?
Sure. Accommodation and food services still having difficulty hiring workers. Retail also struggled. Construction, that's been ongoing. It's always been in short supply for labor. Interesting enough, from the healthcare and social assistance industry, they're saying they're starting to stabilize, and they've had more elective surgeries as we've gotten toward the year end here. But that's also been an industry that struggled continuously with clinicians. So it's been a mixed bag. The respondents tell us that, yes, they have attrition, they're not replacing, managing the variable expense, and then others are saying they can't find enough workers that are suitable to the open job positions that they have.